What is up, YouTube? What's up, guys? The Composer Trader here, and welcome back to another post trading analysis video. And today we're going to be talking about how I managed to realize close to 10% trading Forex in actually only 2 trades. And it's been a while since I have dipped my toes into the Forex space, but yeah, I was checking some charts this week because crypto was a bit less volatile after Monday and Tuesday. And I saw this set up on GBP JPY. I saw set up on GBP USD, also related to the CPI data getting released on GBP. So I saw the models, I saw the confirmations, and as always, we are traders. When we see the confirmations, we don't hesitate, we execute, because trading, after all, is just a probability game where you have to execute your profitable system consistently for a series of trades if you want to net real results. Okay, so we're going to dive into the thought processes behind the trades and the confirmations, but quick spoiler alert, it's going to be the same as usual. Okay, all these models have been explained inside the TCT mentorship that you can find on this channel that you're watching this video on, just underneath the playlist section. Okay, it's a complete breakdown of market structure, ranges, supply and demand, liquidity, TCT models, advanced TCT models, risk management, which is the most important, and last but not least, PO3 schematics. And I'm actually adding a new lecture very soon, going deeper into risk management, executing it on the trading broker itself to showcase you how you should actually use a trading broker, because people, I thought, knew it, but a lot of people actually don't know how to use a proper broker or a broker in the proper way. So the reason why I've actually posted some proof of work here on this screenshot is mainly because the data has changed. It's very weird. I was watching this yesterday. You can see the entry was the 20th of Feb. You can see right here is the GBP JPY contract. It was a partial TP, 10 lots, 4K profit, the stop loss, and the TP, and also the time of entry at 1803. That is right here. But this is actually UTC plus 2 probably, and I'm UTC plus 1 because the entry was right there at 1703 and it says 1803. So just to clarify that, it was actually right there. I think there's a 1 hour time difference with the broker times versus my actual times. But what I'm seeing right now when I was posting the chart for you guys is that we actually took that low right here, when yesterday we didn't. So I have some proof, and I'm going to show you guys all the dynamics behind this trade. But as always, let's build some context. Let's build some nice context. So I was watching just some Forex pairs, and I was like, we might have a potential nice trade in the making right here. So on a very macro time frame, GBP JPY has just been ranging, and we came into supply in the premium section of the macro range, took some liquidity from that previous swing high right there. And then if we zoom in on a lower time frame, you can see that price was trending up, coming into that resistance, making higher lows and higher highs. And then we broke that structure back to bearish, where your expectation order flow is indeed a lower high for a lower low, but it doesn't have to happen straight away. You can, create some ranges in the process of doing so, create some distribution models, or just an accumulation here going over into a distribution. But overall, the expectation order flow would be a lower high for the lower low. But you can kind of counter trade that argument by also saying that the weekly market structure is still intact, right? Because the weekly market structure was making higher lows and higher highs right here, and following the 6 candle rule, this is just one straight shot up. And this move down can also potentially be seen as just a massive liquidity sweep, right? Where we trap people into thinking that there's going to be a lower high for a lower low, and then just move up higher. And the way you can kind of confirm the lower high is by watching your level 2 market structure, which is the market structure from bottom to top. And you don't really have that on the daily time frame. Well, you have it, but only this, which is kind of irrelevant, because by the time you break this low, right, price is already very close to the actual low, and then confirming that as your market structure high is kind of arriving late to the party. So you gotta play the range in here and kind of see how price action develops to then catch your next potential swing trade. But either way, we're on the daily time frame. You can scalp Forex on a daily basis on the lower time frames, right? But what I was kind of seeing here is that, okay, we have that daily structure that's trending up from the bottom right there, which, we could have gone and come into some sort of structure demand in here. I'm kind of using that last pull candle up right there, that last pull candle up before the move down, leaving some inefficiency, kind of front run it on that last bounce, and then we tapped into it. And I was following the structure from the top to bottom here that's making lower highs and lower lows. And then I thought to myself, we may have some sort of an accumulation model going on in here, where we have our initial range low, we have our initial range high, and then we have that deviation 1, where price comes back inside, and then we could potentially come back for our third tap of the Model 2 accumulation. Could obviously also be a Model 1, but then market structure will tell us which one it's going to be and if it's going to get confirmed. Okay, but what caught my attention here is the fact that price is curling down. You can see that price is making these lower highs and lower lows, and we get that curvature down effect, making for a nice liquidity trail, and therefore also for a potential future nice squeeze back up to confirm and complete the high time frame model. So looking at the price action coming into that demand zone, we can see that we were making lower highs and lower lows, and then we broke that structure back to bullish right here, where on the break of structure, we left behind an inefficiency, therefore validating this as structure demand, and therefore this is also the POI for our third tap if we want to confirm and validate a Model 2 accumulation. Price has to reach that structure demand POI, and we actually mitigated even the more refined structure demand inside of the bigger one, where we're making higher lows and higher highs on the lower time frame from the structure from low to high internally in here. So he even came back for the most refined level on the chart, just giving price very little room for error when you want to enter right there on the lower time frame to take you out and then still complete the model, because there's no reason to go lower once you get the confirmation to go long, because there is no demand lower to be mitigated prior to actually moving up. So I saw this, and that's also when I posted in the Discord. Let me pull it up for you guys so you guys can see. That's when I posted in the Discord right here. You can see the composite trader in my Forex and commodities channels. I said GBP, JPY. You can see the Model 2 accumulation. You can see the return to zone. And I said watching for potential TCT Model 2 accumulation schematics. It is currently in its early stages, and I need to see more price action develop, preferably create a range and get TCT within TCT for a refined entry. And then just some other JPY pairs and saying we'll be paying close attention to the JPY pairs. So we tapped into it, and that was at around 8, 9 in the morning, which was in here. And at that point in time, we didn't have any range formations. We just tapped it. So I was like, I would love to get some TCT within TCT, meaning you get an accumulation model that could be an accumulation model inside the third tab of the higher time frame accumulation, where you can get that refined entry for a very extended target. So in here, looking at the range itself, price was making lower highs and lower lows coming into the POI, and then we broke that back to bullish. But as you can see, after breaking it back to bullish, we never got the higher low for the higher high. We actually SFP'd the low. I'm telling you guys, every time you break your structure back to bullish and you SFP that low or you break the low, it's a sign that there's a range in the making. We're downtrending here on the higher time frame. This is simply one lower high for a lower low. Pull that range from low to high, and boom, there is your range. But probably if you go on the 45-minute, as you can see, this is just one lower high for the lower low. So that 50-minute break of structure was just to trap some people into early longing that get stopped out on this wick. Okay, people then long this break of structure, put their stop below the low, and they get stopped out on this SFP, which is exactly the purpose of that SFP in an accumulation model. But right here, we had the initial range low, had the initial range high, and we got that sweep 1. Now, what I saw after we put in that second tap, I saw that expansion up, and we left behind this 5-minute order block, which is also the only order block that can hold price up from taking that second tab low, and therefore also the POI if you want to validate a third tab from a model to accumulation perspective. And what caught my attention here and what caught my eye and why I like this setup so much was this, not only this liquidity trail, okay, because you had a beautiful liquidity trail where there's no resistance on the move down. They're just highs that they're just liquidity, and that price can stop out and let's make for an easy move up towards the technical target, which is right there, which it also ended up doing. But I looked at my sessions, right? I looked at my sessions, and in the purple highlighted area, you can see all the price action during Asia. Blue stands for London, and orange stands for New York AM, and then pink is New York PM. And you can see that Asia opened and pushed price down, leaving all these highs intact right here and right there. And then London opened, pushed price down, leaving all these London highs intact. And then New York opened and also pushed price down, where your Asia lows are taken, your London lows are taken, and now New York opens, sweeps that low, and could potentially confirm a third tab for the accumulation, where all the London and the Asia lows have been taken and all those highs are still intact. And session liquidity points in Forex tend to work very well as magnets for price. So in general, price moves where liquidity is located. So we already swept all sell side liquidity while leaving the buy side liquidity above intact. But it's also in confluence with the session points where the Asia high is still intact and the London high is still intact, while both lows have been taken, which can make for a nice reversal play. So I was looking at how price was developing in that retest right here to confirm a potential third tab from an accumulation standpoint. So right here, if I go on a lower time frame, I can see the mitigation. And in order to validate and confirm, not validate, confirm your model to accumulation, you need to break the market structure from the highest point between your top 2 and your top 3, which is right here, and watch that market structure down towards your third tab low and wait for the break of structure. So right here, we see a low. There's no 6 candle rule right there, so we have to skip it. Lower high and lower low, lower high and lower low, and then right here, let me check what the lowest point was. Right here is the lowest point, okay? So then this was your market structure high. Boom. So once you break that market structure high right there, that is exactly when you confirm the model. You can see initially you have an SFP, and I'm going to dive a bit deeper into why I was liking this bottom so much. But you can see the closes coming above right there. Put that stop loss below the low, and then target the opposite range point for a beautiful 4.42 RR. And I actually made a bit more than that because of this little trick. And I'm going to dive into that. But as you can see right here, if I drag it over to the right, price had a very deep retest and took out the low on the trading view right now. But if I go to Discord, I said right here, I discussed the setup on stream, and then I posted right there while live I was taking it. I'm telling you guys, we don't do in hindsight BS, okay? No cherry pick wins. It's everything is in here, okay? My trades in a live trading environment, it's all live. So I said I'm in, discussed on stream, and I was just letting the trade do its thing, stick to the plan. I went back to check on what it was doing, and you can see right here, it's the 3-minute time frame. It's the same time frame as I'm currently showing it right here. You can see I'm on the 3-minute. It's the same broker, GBP JPY FXCM, and right here it took that low. Whereas yesterday on the same broker, FXCM GBP JPY on the 3-minute, it didn't take that low. And personally, I also didn't get stopped out. Like, I was still in the trade. My broker did not take the low. So I don't know why the data feed has changed on TradingView. That's why I showed that setup in the beginning and the take profit at the highs getting hit, just for some proof of work. But I did not get stopped out in here. It was a very scary retest nonetheless. But to be honest, I wasn't really paying attention to what it was doing. I was setting the trade and forgetting, because even though your technical target, right, your technical target is that high, you're trading TCT and TCT, and you're trading the very high time frame model. So technically speaking, right, this could be the pivot point of this higher time frame trade, which could net around 66 RR. which is a bit too early to tell because, I don't know if such a low time frame schematic relative to the high time frame range is going to create the exact pivot point, or if price wants to come down and just create a bigger range to then go higher or just go lower in general. But profits have been secured. And you can also see price had a very easy rotation back up because of all that liquidity, and actually also all the way to those Asia highs right here that we were discussing. So I hit some nice take profits on there, realized some good money, and still have some left in case we get that 66 RR move up. But what I like so much about this trade and how I managed to actually get a better entry than waiting for that break of structure right there was because of the usage of the bars pattern. And I want to make a lecture about this, but I'm not sure if I'm going to, because at the same time, I'm not sure if I want to create a public lecture about this or a private one, because it is really fucking effective. So I'm just gonna give you some sneak peeks into the bars quote unquote strategy for now, and how you can use it with a proper break of structure. But I'm not gonna go too in depth. But what you could see right here on the 5-minute time frame is that while you were breaking structure, and actually prior to breaking structure, price was forming a very nice low in here. So you can see that candle go down. You can see the candle go down, and then the second candle opens, goes lower, and then the third candle opens, goes lower, closes bullish, and then you have that higher low right here. Boom. So you can see kind of a model 1 accumulation where you take the low once and twice, going over into an extended model where you have a model 1 and a model 2. Just, visualize this as an actual range with deviations on the downside. And right here, we had that break of structure, right? And prior to breaking structure, you were forming this bottom. So when this candle opened, I already started to go long because I was expecting this bottom, and I know these bottoms tend to have some great follow through. And then I was expecting this bottom to have that follow through and then break structure. So I could enter pre the break of structure based on this bottom formation, and therefore have a way better RR entry, because that actually makes a big difference. And I'm working on gathering some more data on it. But if you put your stop loss here, when you enter on that move up, when you see that bottom confirm, and you target the same target, your RR is 8. If you have to wait for here, your RR is 4. So you double your RR with just like a simple little trick. And it was also in covered with a 10-minute potential beautiful bottom right here, 1, 2, 3. So that's how I actually gained a lot of confidence behind this also being a protected low, and price therefore not having to come back for that low. Again, the exchange right now is showing you a different data feed than yesterday. So I'm not sure what the exact data feed is, but my broker did not take out that low. So it was indeed a protected low and made for a very nice move up. So it was that little bars pattern trick that allowed me to get extra confidence behind that low time frame break of structure. And the second trade that I want to discuss was a trade taken on GBP USD because of the CPI data release. Now, it is not that I give one fuck about the CPI data and what it presents to the economy of the GBP. No, it's all about that news just goes where liquidity is located. Just like every day-to-day price action on any market, it just accelerates that process because you have some volatile spikes that then sweep liquidity in both directions extremely fast. So going into my Forex and commodity channels again, a bit up, you can see that right here, Feb 19th, I said GBP USD just had some CPI report. I said we got a perfect push into extreme liquidity, confirming an extended distribution model where you can see the model 1 sweeping that extreme liquidity again, going over in a model 2. So model 1 and model 2, which is a very strong distribution model, is extended because it gives the market makers the extra opportunity to fill their last short orders by grabbing all that buy side liquidity to then reverse price back down to the range low. Expecting a rotation down towards 1.25776. This is at 8:30 in the morning, and you can see right here at 8:30, I said a rotation out to 1.25776. As you can see, the TP is at 774, so 776 is just a bit higher. It's right there, expecting a rotation towards the range low, and that is exactly what we got. Now, underneath that, I said this would be an entry opportunity. If that does not confirm, price will simply go higher. And I wanted to see a move up, fill that wick partially, take out these highs, and then have a break of structure back to bearish and get that rotation down. And if I go on the low time frame, that is exactly what we did. So if you go right here, you can see I wanted a move up to take out these highs, get that low time frame break of structure, fill that wick partially, and then have a rotation down. That is exactly what happens. We took the trade, absolute perfection, 5 or 4R, and you're done, right? Like it was beautiful. And the thing about this trade as well was also that you can see right here, your Asia lows were still intact. So you had that pre-London session, and that extended distribution model tap was put in right at the CPI data release. I'm telling you guys, price will tell you what the news is going to be, or price action just leads in general. Okay, so you get the news, you get that spike up, you get that big wick. Asia lows are still intact. We have this beautiful return to zone building up. And then you get that break of structure back to bearish. Now, mind you, this was not a break of structure on the 1 minute. This was a break of structure on the seconds time frame. And the reason why I was so confident in taking a trade on the second break of structure is because this is just a very clear invalidation. Okay, the price should not go higher than that point. All liquidity was grabbed, all supply was mitigated, even this 1 minute supply block. So there's no reason that price should go above that point again. Like there's just absolute zero reason. If it does, I am wrong, right? And I'm expecting to be right. That's the risk I'm taking. So price goes up there, and I just see the lowest time frame break of structure that I can get my hands on. And I waited for a few more extra confirmation candles to truly expect that rotation down. But even on this local retest, we again had all these lows building up. So all buy-side liquidity was grabbed, all supply was mitigated, and all liquidity was now below. So on that most low time frame break of structure here on the seconds, I put the trigger, stop loss goes above that third tap high. You could do it above here, but I wanted to be extra safe. The RR was already good enough. And we also created some supply there, and you can see we go down, London opens, it gets a retest, and then dumps down lower, taking all that liquidity, having that beautiful rotation back down, completing the 4RR move. Beautiful Model 1 distribution where the extended tap got put in on the news with the buy wick, and then that goes over into a sell. It's just literally what we do every day. And these trades, the beautiful thing is that when I was making YouTube videos 6 months ago, 6 to 8 months ago, maybe even 10 months ago, I don't know how long I've been on this post-trading analysis game, and I would talk about making 5 to 10% a week. People would call you a scammer. People would say this. People would say that. I'm trading live. I'm trading live inside of the TCT trading community. I'm doing this shit. I'm pre-planning all of this in advance for everybody to profit off. And the people are profiting of these moves. People are passing funded evaluations, getting their first payouts. And it's like, what more do you want? You want all my broker statements? Why would I want to share that with you? It's like everything is here in advance. No in hindsight BS, just live trading. That's it. And this was already 10% total shared in advance. Like, I don't know about you guys, but if you want the best ROI and you just like my videos and you're a consistent viewer of my videos, I don't see the point in keep on watching my videos without joining the server. It's $49.99 a month, and you can make 10% in a week. That means if you risk $50 every single trade you take, you make $500. So in 1 week, you can make your 1 year subscription back. Like, it's a no fucking brainer, guys. It's a no brainer. If you like my style of trading, if you like the mentorship, if you like my content, if you like me, the next logical step for you after finishing the TCT mentorship is joining the Discord. And if you're stuck with studying the TCT mentorship and you can't seem to make some progress, then also join the server. Try it out. There's no risk involved. And I would love to see all of you on the other side. Okay. Links are in the bio of the video. And I will be posting more consistently on here to keep up with the YouTube viewers as well. Okay. But it's just very hard because I'm live trading like 2-3 times a day inside the server, and then having to record this and that. Like, my main focus is on trading. My main focus is a trader. I'm not a content creator. I'm a trader. Okay. And that's also the guys that you want to follow. So don't follow the content creators, follow the traders. Okay. And I'm located every single day in here, live trading during London and New York. So I would love to see you all on the other side, and have a beautiful rest of your Friday. Okay, guys? Peace out. Ciao, ciao.